The question is, have you been watching the move in metals? While lots of overhead, they're perking up. And I started some positions yesterday in GDX, SIL, and AGQ. So GDX is gold miners, SIL is silver miners, and AGQ is the 2x leveraged silver ETF. Thank you for all your hard work and information you share. We appreciate it more than you'll know. They're definitely perking up. Welcome to Trends with Friends. It's August 7th. I hope you're all doing well. Hope you had a good week. We're going to talk about some questions on the metals and mining. We'll cover the markets. We'll cover your questions. We're first, thank you for being here. Thank you for your time. Let's share some screens and dive in. So hopefully you can see that, and we'll jump in. Welcome to Trends with Friends. We're going to cover kind of how we do research when you hear things on the news. And then there's also something in the members area that's really cool. A lot of people don't know about it. I want to make sure you know it exists if you love looking at charts. So if you're a chart person, stick around for that part as well. So before we dive in, world's quickest disclosure, this is just information. It's not a direct solicitation to go buy or sell anything. Please always manage your risk, manage your process, manage your plan. We follow the trend. We follow big money. We follow risk management rules. If you have questions, this is a great venue to do so, or hello at investwithrules.com if you're like, this is awesome. I believe in trend following strategies, following big money, following the trend, but I just don't have a ton of time. Just reach out, hello at iwradvisors.com. And the mission at hand, how do we follow the trend, is we categorize stocks and ETFs, and we're looking for this green advancing phase. We'll call it a gas signal. In this strategy, Trend Roadmap, we are exiting positions on day 2 of coasts. So that is where we're exiting over here. And then we try very hard to avoid the absolute painful misery of a stage 4 decline or a break signal. And we're using our proprietary trend program that's a little different if you're familiar with Stan Weinstein, but we love the concept. All right, this is an awesome question. And Phyllis, thank you. We'll leave last names out. But this is a question that I think that a lot of people go through, and I hope that our research will be helpful to help you think through things. And Mike, I'd love you to join in as well. But the question is, have you been watching the move in metals? And this was, subtract 2 days, this was Wednesday. Have you been watching the move in metals? While lots of overhead, they're perking up. And I started some positions yesterday. So nice job, Phyllis, on a Tuesday in GDX, SIL, and AGQ. So GDX is gold miners, SIL is silver miners, and AGQ is the 2x leveraged silver ETF. Always manage your risk when you're playing with leverage. Or you can ask, who is it? Aschenbrenner. Thank you for all your hard work and information you share. We appreciate it more than you'll know. That's really, really nice. Mike, before I jump in, any thoughts? Because they're definitely perking up.
Yeah, and I think we'll walk through how we see stuff that's perking up. But Phyllis, you're spot on. I think you hit the nail on the head. So let's show how we actually see what's happening.
Yeah, so this is roughly the response I gave to Phyllis. So this was Wednesday's watch list. So at the top, we had Shopify. Number 2, now this isn't exactly, I would consider steel part of the metals complex. So Steel Dynamics was at the top. You have Australia EWA, which is a lot of metals and mining, was an ETF near the top of our watch list. We have COPX, Copper Miners, was on our watch list. And again, what this is short-term, long-term uptrends with those green arrow confirmations, which we'll look at in a minute. So we see what you see. Sometimes we're full and we can't add more than our capacity, but this is an example of what we were looking at. So the question is, when I look at something like this, is do I see AI and chips and some, but not much. What I see is software, materials, MongoDB, which was more software, equal weight, networking, and some food. And some of these had some good earnings reactions. Some there's always possible that it doesn't, like Axon didn't at the bottom. So first is the watch list. So the ETF rank flows into this, and it's sorted by relative strength index, high to low with a cutoff of 68. And the hope is to save you a ton of time. So this is how we use our research. And then here is the ETF rank from Wednesday. And again, you have Australia, you have copper miners flying up the list, platinum, you have palladium, and XME, which is the metals and mining ETF on a gas signal. So a lot of gas signals and U-turn signals. So the confirmation was there. And let's get really specific. Um, if one was to take the ETF rank, sort it by who's done the best since 7:30. Look at the list. So gas signal on SILJ up 11%. This was on Wednesday. GDXJ just shy of 10% on a U-turn, so doing better. SILJ right behind it, which was on your question. Remex, I assume it's probably on a U-turn now, but Remex was still in a downtrend, but coming back and making some serious progress. COPEX, metals and mining, cloud, miners, uranium. Mike, any thoughts? I just sorted it from performance for the month so far.
Yeah, so a natural question might be for those of you who have not downloaded the data out of Google Sheets, you can. And we could show you, in fact, once we go to a live screen, we could show you that if you'd like. But basically, you can download the live sheet, including the rankings, into your own Google Sheets, or you can bring it over to an Excel, whatever spreadsheet program you use, and you could do these kind of sorts like Scott just did here on the screen.
Yeah, thanks for sharing that. Okay, so let's get to the charts. So if you use the trend roadmap trading view chart, amazing. If you don't yet, you go to start here and you go down to open a free trading view account. You do not need to pay them. And then you apply our indicator. So you say use on chart, and this would be the 2.0 version. You can opt in for the boxes. So you literally double click on the arrow of the momentum, positive or negative within the signal. And if you want the boxes, you can add the boxes. You can check out last week's video. I did it as an opt-in versus an opt-out, just makes the chart a little bit more noisy. So let's look at GDX on Wednesday. So I'm just pretending that I'm in the cockpit. We are doing this for a day job in the newsletter and the advisory. But here's GDX on a U-turn. You have the green confirmation. So in my world, that's you're still below the 200-day, you're above the 21-day EMA, you're above the 50-day simple moving average. So you're possibly this is your low around $73, and you got your confirmation that things are improving starting at the end of July, and you got all these green arrows, and you finally got your U-turn that worked, and it broke out. And Wednesday was a small add, and then maybe you're adding on further confirmation, and then Thursday, and then Friday, and today, this is a static picture, but today you're at 90.12, so you're all the way up here, and maybe it consolidates a little bit, but you're now on overheat, which is pretty wild. So the answer to that question, Mike, would you say is small add, and you could always add more?
Yep, absolutely. In fact, Jim asked a question, and by the way, Mark, I'll get to your comment in just a couple of minutes. Great comment, Mark. Thank you. But Jim, your question pertains directly to this. Some of those metal tickers are in U-turn with green arrows above the bar versus others are already in gas mode with green arrow. Please explain pros and cons of buying with green arrow in U-turn versus waiting for the gas. Great question.
Yeah, so here's a really here's a good example of you actually got a U-turn upward arrow. I know this is a little small, so apologies. May have to blow your screen out more. So you had a U-turn gas, you had a U-turn gas, sorry, a U-turn with an uptrend, a U-turn with positive momentum, a U-turn with positive momentum. So you're going to get more chop in this area. And whether you are a technical person, this is like shoulder, head, shoulder, and inverse head and shoulders, and your neckline. So there's a million different things you could be looking at. But what we're trying to do in this newsletter, in our advisory practice, is we've done extensive back testing, And it says go for the gas signals because you have broken out of that initial downward range. So SIL, which is the silver miners, was looking a little bit more appealing than GDX at that time. Again, we don't know who's going to win the horse race, but this would have been the one that if we had availability and it was at the top of our list, we would have taken. Anything you'd add on that, Mike?
Yeah, it's kind of like, we're playing with probabilities here, and a U-turn is certainly a valid signal to go into if that's your process. But it's getting you closer to the theoretical bottom, assuming that is a bottom that's in the break. But we're just adding a bit of probability on our side, waiting for the gas. Are we giving up some of the potential gain off the bottom? Absolutely. But it's like it's all a risk reward thing. We're giving up a bit of reward in order to hopefully decrease our risk. That's essentially our model.
Yeah, you have a better hand of cards on a gas signal than it's slightly better than if you had a U-turn. So that the cards in which you're holding are just slightly a higher probability. Doesn't mean you win the hand, but it's a higher probability that you could win the hand. And then please always mind your risk because these gap downs can be horrific on leverage. But look at silver 2x long silver, which was requested AGQ at 400, and it came all the way down. Look at that. I mean, someone top ticked that, and now you're at 50, $60. Yuck. But so this was a U-turn. So it's possibly a small ad. Again, you have to have a really wide risk tolerance if you're using leverage. So please be really careful. But I'll just stop there.
Well,
Phyllis,
actually, Scott, if you don't mind, go back for a sec.
yeah,
One thing Phyllis touched on is she used a great term, overhead resistance. And so, question for you, Scott, in the realm of overhead resistance, and we've talked about it a few times on these videos, with a stock, an individual company stock, I think the concept of overhead resistance is real, meaning that if you're coming off of you've got a lot of people who own the stock at higher prices than what it's at now. The overhead resistance is such that as the stock comes back up off a bottom, that those people are going to be just happy to break even and sell out. That's the concept. I'm simplifying it, but that's the concept. My question for you, Scott, is does that concept hold true for an ETF, in your opinion?
I think it's so. I've heard someone use this expression before, and I think it holds whether it's a stock or an ETF.
Yep.
Let's just break humans down into three buckets. There's a bucket of humans that are not going to sell, haven't sold, wrote it down, wrote it up. They believe in silver miners. They're in. And that third, they're not touching it. There's a third that has already sold, and you don't have to deal with them anymore. And there's a third that will sell strangely when they break even, and they're like, "Ugh, that was awful, and I got my money back." So you're fighting against that third, and that's why it's harder. And if you're at all-time highs, then there's less of those people who are fighting to break even, and it's hard to sell when you have lots of gains. It's trend following 101 here. It's there's a higher likelihood it just keeps going higher, even though it's counterintuitive, which is like the pinnacle of the best loser wins by Tom Hogarth. It's just like even though your brain like you should be buying strength, it just seems it works. But I would add that the answer is it's all differentiated. I think everyone's the same. We're all humans. I highly doubt we're totally efficient. The markets are not terribly efficient over short periods of time. Over long periods of time, it all shakes out. But yeah, I think that's why you just position size in a way that you can sleep at night and try to catch some really good trends. I think this is consolidated for 7 months, 6 months, and I think this is if the dollar falls, this stuff goes a lot higher. I hope this helped you identify some uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com.